We're live.
Great, thanks, Matt. Welcome everybody to the June 7th Finance Committee meeting. Jenny, will you call the roll?
Mr. Peterson? Here. Ms. Aludo?
Here. And Andy Keeler will be joining us just a little bit late, but we're going to go ahead and get started. I will move that we accept the, and we don't have the meeting minutes yet, do we?
No, I'm sorry.
It's too soon. Yeah, it was too soon. See, we just meet all the time now, so.
Yeah, I'm noticing that.
That's just how we roll these days. Well then, Matt, I guess are you gonna present, Matt?
Yes, thank you, Chairperson Aludo. I just have a short presentation to go over the agenda, and then I'll turn it over to our municipal advisor, Baker Tilly. So we have three things on the agenda today: bond refunding, a review of our tax increment financing district, and a discussion of Dublin 2035. For the bond refunding, we have our municipal advisor, Baker Tilly. From them are Brian Cooper, the director, who'll be doing the presentation, and senior consultant, Thomas Rakudo. They've worked with the city for several years on our last several bond issuances, so we're pretty familiar with them, and they're pretty familiar with us. So with that, I'll stop sharing, and I'll turn it over to Brian Cooper.
Hello. Hello there, everybody. Good afternoon. My name is Brian Cooper. I'm with Baker Tilly. I'm a director in our Columbus office and also joined by Tom Rakudo. Tom is actually a manager now in our office, so kudos to Mr. Rakudo for doing great things. And I am just trying to find my presentation now, and I know I have it pulled up. I just have to find it. So my apologies. That is not it. Here it is. Okay, should be coming up here.
Yep.
Thanks for having us in front of the committee this afternoon. Glad to be here. Just going to do a brief update on the city's debt portfolio and talk about a few upcoming projects so that we can begin to formulate a formal plan of finance, get legislation in front of City Council, and move forward with some of these projects. So page 2 here is just a summary of the City of Dublin's outstanding debt. This represents city's bonded debt. You will see the city has approximately $147 million of limited tax general obligation bonds outstanding and $30.2 million of non-tax revenue bonds outstanding for a total of $177 million. Of note, highlighted in green, you will see the Capital Facilities Improvement Bond Series 2013 and the Capital Facility Improvement and Refunding Bonds Series 2014 highlighted here. Those bonds are callable on December 1 of 2021. You can see that here. And what that means is the city has the option to redeem these bonds and we can issue new securities for interest rate savings and garner those savings because of essentially lower interest rates. And so just a quick update on the fixed income capital markets. This is a historical graph of the MMD, which is the benchmark that we use to gauge interest rates for all tax exempt issuances. This is the 10-year MMD, and you can see that during the approaching the pandemic in early 2020 and post pandemic, we've hit all-time lows in terms of interest rates. We did see that peak low last summer/fall. There is upward pressure on interest rates, so rates are predicted to go up, and we've seen a little bit of that so far this year. But in comparison to the last several years, you can still see that on an absolute level, rates continue to be at historic lows. Page 5 is a summary of estimated savings for the city's refunding bonds. So you'll see on the left here we have the Series 2013 bonds, and we compare that to a new issuance at a lower interest rate. And what we will essentially do is we will pay off the 2013 bonds, issue new bonds in 2021, and create about $100,000 worth of savings per year through 2033. What that essentially equates to is about $1.1 million of savings per year on the refunded issue. The same story for the 2014 bonds. The old debt service is about 9.6 million. We would issue a new series of bonds, pay off these old obligations, and moving forward, the debt service would be lower, also by about 100 grand a year. The final maturity on these bonds is 2029, so they're a little less. They have a shorter maturity, so the savings is not quite as much. But overall, we are just under about $2 million of savings combined on a gross basis. These are net savings numbers, so that would include all the costs of issuance and costs associated with bringing the deal to the market. And when we present value those savings to today's dollars, that equals about $1.8 million, 9.61% savings. So the GFOA recommendation is to move forward on deals that have savings between 3 and 5% or more. So this far exceeds that benchmark. And so this is an excellent opportunity for the city to save some money on their interest accruing on these obligations over time. What we will do, what we plan to do is, in order to get some efficiencies, we will time the issuance of the refunding bonds the same as any new money issue that the city decides to move forward on, so that we do them all as a combined issuance. If we only have one transaction, the city saves on transactional costs and picks up some efficiencies in terms of documentation and getting ratings and bringing a deal to market. And in conversations with Mr. Stifler, we have essentially sized here for the committee's review a $1 million issuance for sanitary sewer over 20 years. That works out to about $65,000 average per year. The cost of that is about 1.77%, very low cost of capital at this point. And then we've also sized a $5.7 million bond for park improvements. That works out to about $355,000 per year. Same cost of capital here. And then we've provided an aggregate schedule for the committee's review. I think the recommendation from Mr. Stifler and from ourselves is that I believe the city plans to move forward with the $1 million sanitary sewer this year. But the $5.7 million, I think we're still evaluating whether we're going to do that now with the refunding issue or we're going to wait till next year. Mr. Stifler can elaborate on that, but that's our current understanding of where we stand. Of course, we can move forward with this. It would be fine. If the city determines to delay this issuance, really, in my mind, the biggest risk on that is interest rate risk. So if interest rates go from, let's say 2% this year to 3% next year, then the difference in cost of capital is about 1%. No one really knows which way rates are going to go. I think that risk is nominal, and so I think what will serve the city best is really evaluating what the appropriate timing is and then move forward with whatever works best. I'll pause there for any questions on either the refunding or the new money, and then we can talk about the timeline and next steps.
I don't have any questions so far, Greg, do you?
No, I'm fine. Go ahead.
Now I'll proceed. So the basic timeline, we will want to time the issuance because of some considerations with the refunding bonds. We're going to want to time this issuance to close in early September. So June, July, and August, we'll be working to bring the bonds to market. So the first step of that process is authorization. You will see coming coming to you in future meetings, bond ordinances for both the refunding issuances and then any new money issues that the city moves forward with. Once council approves those ordinances, we will start to work on the documentation of the bonds and getting them ready for market. This will also include interfacing with the rating agencies. The city's currently rated by Moody's, S&P, and Fitch ratings, and carries AAA ratings from all three of those rating agencies. Interestingly enough, we've with the help of Mr. Stifler, we've gone through the surveillance process with both Moody's and Fitch. Everything went smoothly there, no surprises. So we feel pretty good about where the city stands with respect to its current ratings. Don't anticipate any problems with these new issues going forward, especially considering the bulk of them are basically refinancings to lower debt service costs. So no additional heavy burden in terms of additional debt. Once we've got everything documented, approved, and rated, we'll go out through the sale process, sell the bonds in the open market, garner the lowest interest rate cost possible on the day of sale, and wrap up and document and close the transaction in cooperation with the city and bond counsel. So that is the process.
Hey, Brian, can I ask a quick question?
Of course.
And forgive the stupidity of these questions in the event that they are stupid. You know, if I refinance my mortgage and it's a 30-year mortgage and I've got 15 years left, and I refinance it and I make it another 30-year mortgage, my monthly payment may go down, my interest rate may go down, but I've just extended the period of time over which I have to repay. Does this not adjust the maturity date of any of the bonds if we go out and resell them? And please go ahead and tell me whether you think that's a stupid question.
No, it's not a stupid question at all. The answer is this does not extend or shorten the current maturities of the bonds. And the main reason for that is when these bonds were originally issued, the finance director certified the useful lives and the maximum maturities of these improvements that we made. And so we can't really extend the life. We can if the fiscal officer wants to determine that these assets have a longer life than originally anticipated, but almost always we keep the same maturity, so we're not extending the maturity. And that's certainly a great question. One thing that is interesting is sometimes instead of taking the savings over time, we shorten the maturity. So you can see, for example, the 2014s, they're saving about $100,000 a year. That total savings is about $750,000. Sometimes the planets align and you can actually reduce your debt service by 1 year. So you really don't decrease your payment. You keep your payment the same, but you shorten the maturity and you pay a little less interest. We will have the flexibility to do that if we determine, and the finance director determine that's the right way to go. But for most assumptions, and when we approach these refundings, we typically assume a level savings and a similar final maturity on the new bonds.
Got it. Thank you.
Yep, you're welcome. Any other questions on the refunding, the new money, or the plan of finance?
So this might be a Matt question. When do you expect to have this in front of council for council's review and approval? In July, at our July meeting?
Yeah, excellent question. Actually, we're going to be discussing at the June 14th meeting the conversation about the Riverside Crossing Park financing. It's programmed in the 21 through 25 CIP to be debt financed. There was some conversation at the end of the CIP last year about cash financing that. And it was determined at that time that we would leave it in the CIP as debt financing, but that we would revisit the conversation to cash or debt finance it prior to making a decision. So there's a memo that'll be included in your June 14th packet that kind of discusses that process. And it's my recommendation that we continue to defer that. At this point, there are as many unknowns as there were towards the end of the CIP, I would be uncomfortable proceeding with cash financing.
Right.
I would be more comfortable if we wanted to proceed with debt financing, given the potential interest rate risk and some of the other factors that maybe make that the right call. But understanding that council might want to go in another direction, there's really no reason that we have to make the decision now, other than interest rate risk, which is always a risk when you're in an environment where rates can go up. So at this point, that's a conversation that will occur at the June 14th council meeting. These ordinances will all be brought forward at the June 28th council meeting, and then they'll be voted on at the July 26th council meeting, so that they're effective at the end of August, and we can start doing the rating process and the financing process to get the money into the city by early September.
Gotcha. That makes sense from a timeline perspective. It's helpful when you kind of lay it out specifically like that. So thank you.
Yeah, absolutely. And the other
Alright,
thing I just wanted to mention is we're having this conversation around refundings today because this debt is callable. Almost all of the debt that we issued is a 20-year debt with a 10-year call. That seems to be a pretty standard kind of offering. It's really important. These calls have become very important because they eliminated advanced refunding with the tax cuts of 2017. It used to be, Greg, to your house analogy, it used to be you refinanced your house whenever rates went down enough. And you could do a similar thing on tax exempt debt. We'd probably be refinancing a lot more if we could, but you are only allowed to refinance now at these call points. And this is a call point for this debt. So we're going to make the decision to move forward. But that change to law is actually, not in municipalities' best financial interests, because we're not allowed to refund every time rates go down far enough to hit that GFOA 3 to 5%. We're at 10% here. We'd have been at 3 or 5% a couple of years ago. We might have been able to refinance and take advantage of this a little earlier. So that's kind of the calculus that we have to go into now as the tax laws have changed.
Well, and you know what, Matt, it's going to be an interesting conversation, that debt versus cash funding. When you look at all the other policy conversations that are going on that are going to could impact our cash and our cash flow, it makes debt financing so much more attractive. And as long as money is so cheap, that's attractive. But I would imagine, Brian, you would agree, if more and more municipalities across this country do what we're doing, it's going to start to drive those interest rates back up, I would imagine, and money's not going to be as cheap as it is now in 6 or 8 months.
That's the prevailing thought. Yeah, I tend to agree. Just as we're seeing, the cost of construction and labor going up, we've got an artificially low interest rate environment. As people take advantage of it, and more issuers come to market, there is a natural supply that will start to show those rates coming up. So our general consensus is, if you want to lock in low rates and you want to eliminate interest rate risk, that you're better off doing that now when you're in this area of the graph versus doing it when you're in this area of the graph, right? So there is there's other considerations other than just interest rate, but that's certainly our perspective.
Well, and I have a lot of business clients and business people, when there is a risk aversion, I guess, but there's also a reasonable amount of debt to take on to pay for this. And this is I greatly appreciate you and Tom and all the effort and the advice you guys give us there, and having Matt at the helm here makes me infinitely more comfortable that we're doing the right thing. It's a tricky thing. I mean, it really is a juggling act.
It's a balance.
Yeah, and you've got to be willing and able to balance across the entire front, not one end or the other. So thank you for all that.
Well, I guess, and the parting thought is, fortunately, folks with strong financial health, like the city of Dublin, have options. And so you're not backed into a corner of whether or not you need to go to the market or not. You have flexibility. You have options when it comes to, the way things are taken care of. And my kids are coming home, so they get to be part of the meeting too. Sorry about the background noise.
all good. That's gotta have a lot. We're still in the grace zone, right? Where you just gotta have a lot of grace for everybody when we're doing this remotely. So yeah, Brian, thank you for that. I would tend to agree with you, and I think Greg is spot on. When money's this cheap, it just makes some sense to do some debt financing and let your cash do other work for you. So, all right, cool.
Well, thank you all. As always, if you have questions, feel free to reach out anytime. We appreciate the opportunity and look forward to seeing you again.
Super. Thank you so much, Brian. Really appreciate your time.
Thanks,
You
guys.
got it. Thanks.
Thank you,
everyone.
Brian.
Yep.
Excellent. All right. You want to move on to TIF reports?
Yeah, so I'm going to introduce our new financial analyst, Megan Murray. You may or may not recognize her from the city manager's office a few years back. She was an intern in that office, and she's rejoined the city in the financial analyst role. She's been with us for about 3 months, and she's doing a great job. And it's time to put her in front of finance committee and let her talk about TIFs. So today we're going to have a short little report on tax increment financing. And with that, I'll turn it over to Megan.
Great.
Yeah, good afternoon. Nice to see a lot of you again or meet you for the first time virtually. As Matt said, my name is Megan Murray and I'm the financial analyst. And so as you may know, the city held its annual TIRC or Tax Increment Review Council meeting on May 14th. So there the city presented its TIF report and it was accepted and found to be in compliance by all members of the TIRC committee. So information on this slide and many of the following slides are similar to what was presented at the TIRC meeting, but with a few additional highlights. Also, you should have received a packet of information prior to this meeting with more detail about each of these individual TIRCs, or TIFs. So if you have any questions, please feel free to reach out to myself or Matt on these individual TIFs as we go through them. But this map here shows 42 TIF districts currently in the city of Dublin. As you can see highlighted here in blue is the Bridge Street District TIF area, and in orange is the Perimeter West, which is our only straight TIF here in the city. And then all the other areas highlighted in green are our non-school TIFs, meaning that the schools continue to receive the amount of property taxes that they would have been payable to the school district if there were not a TIF exemption. So these are the 42 TIF parcels currently in the city of Dublin. And then on the next slide here, just as a quick refresher, according to state code, TIF public infrastructure improvements can include the following: roadways, parking, water, sewer, environmental health, utilities, stormwater, demolition, parks, streets, and landscape. So when we're looking at all the projects in the later slides, you'll see that a lot of these all tie into or related to one of these areas. And then when we look next at our report here for our TIFs, this report here highlights that about 224.3 million public improvements have been made benefiting the TIF areas, with service payment revenues that have already been received or through the city advancing funds from the general fund or capital improvement fund, with the expectation that those advances will be repaid from future service payments received. And these public improvements have leveraged $843.6 million in private improvements for these TIF parcels. Also, I think it's interesting to note that the number of jobs that have been created and or retained in these TIF districts is reaching about 19,000. So when we take a look at our current cash fund balances in all of our TIF funds, you can see here that we have quite a few different TIF funds with varying TIF fund balances and as of the end of May. And also, just as a note, these do not include any encumbrances for current year purchases. But when we look at our next slide, we'll be able to see the TIF fund balances on each of these TIFs and their general purpose or use within the city. So here you can see we have lots of different purposes, mainly revolving around debt service or 270-33 debt service repayment, and a lot of different CIP projects. So speaking of CIP projects, we can look at the impact of our TIF revenues on the 2021 capital improvement program. TIF revenues make up about 25% of the total resources for our capital improvement plan. And these TIF revenues include debt service, advances, TIF service payments, all for a total of about $18.2 million. And this is a significant portion of the total capital budget revenues. And this really adds diversity and stability to our capital improvement program. So the city isn't just relying on one revenue source for our program, which can help if there are any economic impacts outside. All right, so here we can look at our projects whose debt is currently being supported by income tax revenue and the different years that this debt is expected to be retired. So there are some here highlighted with one asterisk, and these are projects that could be potentially paid through TIF revenues, but are currently being funded through income tax revenue. And if we take a look, we'll see here another list of projects that are all being supported. Their debt is being supported through TIF revenue. And here that this debt is expected to be retired. So here we can see a lot of different projects. And then on the next slide, we'll see how these TIF revenues from these projects are contributing annually to our debt service. So here in 2020, you can see that the city was able to pay about $10.6 million in debt service from other sources like TIF revenues. This expense otherwise would have been paid with income tax. And you can see that this is projected to be a continual benefit for about $9 to $10 million through about 2025. So we can see that this payment of about $10 million in 2020 to debt service and from other sources like TIF revenue, as seen on the last slide, can free up about $7.7 million of income tax revenues in 2021. So highlighted here in yellow is proposed new debt that could be funded given the success of the TIF funded debt service, creating more income tax revenue availability. So what does this mean overall? What are our main takeaways for our tax increment financing currently? Well, our service payment revenue must be used for capital improvements that provide economic development benefit to the parcels in a TIF district, as we saw. Service payment revenue from the TIF districts are a significant revenue source to our CIP program, particularly regarding the debt service. And our service payments diversify the CIP program's revenues, making it more resilient to economic shocks. And overall, the city's TIF districts are strong, functioning well, and in compliance. I believe Matt was going to try and speak a little bit to the future of our actions regarding our TIFs here.
Yeah. Thank you, Megan.
Yes.
Sorry, it took me a minute to turn my camera on here.
Oh,
Yeah, I
no
just wanted to note that there are some future actions that we'll take to continue these activities regarding our TIFs. One is we'll continue to bring TIFs forward with development agreements as appropriate. There are none currently ready for public discussion, but that's always something we're interested in doing and would obviously be something council's involved in. We will continue to modify TIFs to now allow new public capital infrastructure projects. Some of the projects that you see there that we're paying the debt service on are previous modifications of TIFs. One that's coming up that you'll likely see before the end of this calendar year is a modification of the Thomas Kohler TIF to allow for the Rings Cara Road intersection improvements. Those were programmed in the 21 CIP using those TIF funds, but that TIF needs modified in order to make that happen. Some of our older TIFs, like Thomas Kohler, said they were very specific about the improvements. So when we go back and we utilize those TIFs, we kind of have to expand it and make it a little bit more broad. And that's kind of an example of something we have to do there. And then we'll continue to search for new TIFs whenever public infrastructure improvements in an area have been made. The area of most focus would obviously be the Bridge Street district, as we've made significant public investments down there. And we're paying significant amounts of debt service on the park and the bridge specifically that would be reimbursable by TIFs should they become available in the future. So we'll continue to look for those opportunities. So with that, Megan and I are available for questions, and I appreciate your time.
You both. Jenny, can we get this presentation also put into board pack? Then Matt from the Turk meeting had that full report with all the TIF stuff. If it's not in board pack, can you have Jenny add it to here as well, just so that the other members of the finance committee can take a look at it?
Yeah, absolutely. The full Turk report will actually be a voting item at the June 14th council meeting because the auditor requests that council make a motion to accept that. So it'll be at that meeting.
Put it in that one.
Yep, there's some additional reports that Megan mentioned that are more graphical in nature. They contain some nice bar graphs on service payment revenue from the history of the beginning of TIFs, property valuations, because not all TIF property values necessarily increase every year. You'll see some deviations there, and some parcel values on the back. So if you want to get into the specifics on any particular TIF, those reports are a really nice reference to kind of give you a quick, easy to kind of digest snapshot of what a TIF's been up to since it's been created.
Yeah, that's really nice. I think that's definitely something you'll want to remind council about at our council meeting. Because I mean, the properties go through appraisal years, right? And that's really when you start to see the change in the value of the property, but not every year is an appraisal year.
Yeah, they do I don't remember the technical terms, but every 6 years they do a complete reappraisal, and then every 3 years they do kind of a guesstimate reappraisal. So it's
Yep.
really on those 3 and 6 year cycles that you see property values change.
Yep. All right, super. Other than that, thank you and welcome, Megan. I don't have any additional questions, Greg, and I know Andy, you kind of joined us in the middle of it, but what questions do you guys have?
No questions for me.
Nothing for me. Thank you.
Great. Yeah, and just as a reminder, I sit on the Turk, so I got to see all of the lovely, really detailed ones. But that stuff's all available to you guys if you guys ever want to just reach out to Megan or to Matt, and then we'll get it for you. Overall, I think they're all performing pretty well. There were not very many that were having any struggles, so it was a good report.
You know, I don't have any concerns that anything's behaving in a manner that hasn't been anticipated.
Awesome. All right, well, super. Thank you, Megan. Thank you, Matt. Really appreciate it. And I guess we will move on to Dublin 2035.
Good afternoon. Can everybody hear me?
There
Thumb
she
up.
is. Hi, Tammy.
Hi. So we are entering our second round of reviews for each of the committees. This is the second time we've been before the administration committee. So we have formulated about, and Jamie, I'm sorry, I don't know the exact number. I'm going to say 40-ish big ideas in totality with all of our groups. And so today we want to perhaps talk about any of the ideas that you may want to talk about further or perhaps prioritize as this process moves forward. So we appreciate your willingness to talk with us again. And I'll hand it over to Jamie and Logan.
Great. Thanks, Tammy. Good evening, everyone. So just to reinforce, we've had 2 rounds with all the groups except for yours tonight. And altogether, you've generated about 80 of these ideas, but we've tried to massage them and took out some overlap and are operating with 39. And we expect, that this will be, this is my best analogy, like an accordion. Like there's going to be some compressed out, there's going to be some added. It's just going to be this process, but it's not going to be linear. And I think most of you know that we do have a process where the public is going to get involved following your June 21st work session. So there is going to be some new input that's kind of put in here, but we want to continue the process of refinement with you. So, and there are 3 things that we'd like to, discuss tonight with you. The first is, of the list that we have right now, the 39, which of those, do you believe should really be elevated? And we're not taking anything out of the mix right now, but are there some of these ideas that you see that really maybe are stronger or more significant than others in meeting our objective? So that's the first thing, is elevate some ideas. And then when you're talking about, why you think a particular idea really should be elevated, we want to know the why part. We want to understand the motivation about why you think it's, would be helpful to do that. So I want you to think about the why. And then the third part, I think it's been a while since you've addressed this kind of issue, but, the other groups at the end of the evening, looked, reflected back on what they thought should be elevated, what was really feeling important. And described a little bit about how they thought, what kind of community would we create? Like, what's the point of doing this for Dublin? So I think we'd like for you to think a little bit about that as well. With elevated ideas, what would Dublin be like in that regard? So I believe you all should have received like a summary after the first round of meetings were closed, and hopefully you have that handy. But Logan, would you pull that up just for a minute here? So I hope that this is clear to you, but all 39 ideas, they've been organized into the 4 topics, the 4 committees, and then it's probably pretty obvious to you when you were actually talking before that some of these ideas don't purely fit, in one of the 4 categories. They actually, bleed over into multiple categories. There's many of them that are, in the 3 category. And so what you're seeing on the right is in the red, that's quality of life. In the blue, that's land use. The yellow is infrastructure, and then economics is your category. Now, and if you go to the left of that, where there's like the circle, Logan tried to capture what other committees also offered an idea that was very similar, if not exact to that. So you can get a sense right now across committees, where that happened. And there's one on your list, like the infrastructure 0.11, 11. There's actually 3 of the groups actually, came up with that idea or put it out there. And then we actually identified you out here as a critical part of that idea. I mean, the economic parts are, they show up in a lot of places. So you're involved here significantly, as I'm sure you would expect. So, but that's how these are coded. Now, I would tell you that one of the strong themes in 2 of the other meetings in the second round was, well, that some of these didn't, like on their own, they're like important work, but they don't rise to the level of a big idea unless you start to wrap them together. So we did get some direction, and I'm telling you this just so you know, so you don't feel like you have to do this, but we got some, recommendations on how to bundle up, 2, 3, or 4 of the ideas. And if you put them all together, it really could be, like a big idea. So that's the background on tonight. You'll be getting more information about the work session on the 21st, but there is going to be a futurist, Nicholas Badminton, who's going to be speaking to you. It will be available. The public will be able to see that. We expect Nicholas to, stretch our thinking a little bit about what we could do. But then there's going to be some input opportunities for the public. So as I said earlier, there are other ideas that are coming, but that is our approach. And you may have more ideas after listening to Nicholas or seeing something that someone else did. So I'm going to stop here for now and see if any of you have any questions just about process or what we're up to, and then we'll go into seeing if there are ideas that you want to elevate. Yeah,
I have a question, Jamie. So you had asked for more or less a homework. You had given us a homework assignment,
right?
For us to individually go through these and combine and delete and elevate and that kind of thing. If we've already done that, are there any outstanding items for us specifically?
No, Andy, I'm glad you brought that up. I was sitting here thinking about, and I wanted to thank you for your work. I mean, Andy did just what we just described, and really took this document and the other attachment to heart. So Andy, like, I don't know that there's anything else, unless you just wanted to participate in the discussion, but you don't have to do that again. You don't have to do this elevate piece, because your stuff was really clear and really solid.
Okay, so the reason you're asking this group tonight is because I happen to be on another committee and you gave us
Exactly.
that assignment.
That's
But
exactly.
perhaps Christina wasn't in one of the groups, so she is getting the assignment tonight that I got 2 weeks ago.
Exactly. Yeah.
Okay. Okay.
Yeah. Yeah.
I did not know I had an assignment if I had one prior to tonight.
Yeah. Well, you have a chance to make up, I think. But you don't have to do it for tonight. I mean, you didn't have to do it before tonight if you didn't do it. But that was a way I think we wanted folks who didn't, hadn't, really dug in. But after they had the conversation, I think it became more clear about the kind of impact they could have with their comments.
Can you put that list back up, Jamie, or whoever? Who I don't know who. Maybe
Sure, that was
Logan.
Logan. Yeah.
And so maybe it would be helpful, Andy, if you wanted to just sort of kind of verbally walk us through what your thought process was. We could start that conversation there as we talk about which ideas we really think need to be elevated. And are these ideas we think that need to be elevated from that sort of finance committee lens, or just across the board?
Well, I would ask you to look at your list. I mean, you can see that, some of the groups had, 14, 13, like there's a lot to kind of like get those groups to sort of sort that out a little bit. For your group, you could start with the economics piece, but then go anywhere. And you're not, even the groups that had 13 on them, they didn't feel constrained by their particular category either. They literally looked at the totality of the list here. And I mean, one of the reasons that we ask about the elevating piece is because, there's going to be more ideas coming, and 39 is a lot, right? And so just trying to managing the effort or the work that might come out of this, say 39 big ideas, might be a bit overwhelming.
You know what? It's funny, Jamie, because we have some of our fellow council members use lots and lots and lots of words. My fellow council members on this committee are more likely to use fewer words, to be more targeted with their words.
Yeah.
And more,
Mhm.
I don't want to criticize the more words, but more limited in them. And I sort of think that some of the ideas that are finding their way on here are, like you mentioned, they're maybe not really big ideas. They're not visionary things. Like, for example, the gold status with the bicycle friendly community. I mean, that sounds great, but I don't know that that's a big visionary, boy, we have 26 miles of bike paths. I mean, I get it. I understand.
Yeah.
So for me, as I try to do, we'll use as few words as possible. For me, on our 4 items, I think the most important, at least for me, maybe of all 39 of these ideas, could be included in that evolved economic model for the city's future, because like we were talking about earlier in the meeting before we got to this portion, there are a lot of policy issues being decided down Capitol and across the country about funding models. And now what COVID has done to us, COVID really could turn our financing model that has allowed Dublin to be as healthy financially as it is on its absolute head.
Yes.
And we're going to need to be able to compete in a different environment where it used to be, you taxed where you worked, and that is going to change, I think. And this community better be prepared to adapt to that evolving thing. So, things, when it says evolved economic model for the city's future, that sounds like it could be sort of ambiguous and could include a lot of things, but I think that is the single most important thing for us as policymakers, not only internal to our community, but external to the State House and to Congress and across the country. If this really gets turned upside down the way that it looks like it maybe could, the council that's here in 2035 is going to have an infinitely higher, more significant challenge financially than we do, because of what we've done in the past. And so I think we've got to figure out a way. And when you think about the broadband and getting fiber into our neighborhoods, for me, in my mind, that is trying to target that exact problem. is getting
Mhm.
into the residences, which is where people may begin to working from, as opposed to working in our office buildings. So obviously, the office buildings, that's all important and all that. But for me, it's the tip of the spear. Everything else flows from our tax base.
Mm.
And that also, I guess my second and other comment would be on the first goal, which is talking about investment in revitalization at this council, more so than maybe any other group of council that I've been on, is pretty focused on land acquisition and using that as an economic incentive for
Yeah.
Attracting and retaining businesses. And I think that's extremely important. And that when you factor that into that evolving financial model that we're going to be dealing with in the next 5 or 10 years, it can become very, very important as well. And most of the other things, if you wanted to go through and look at the rest of these other ideas, if we do not have if we are not AAA bond rated in every category by every rating agency, most of these other ideas we want to do are going to be at risk.
Right.
So for me, that's about as important of a thing as you can address.
No, yeah. No, that's real clear, and I appreciate you. I mean, I couldn't disagree with you on that aspect of the work, that needs to be addressed, because it's the fuel for so much other here. I also would say, I mean, I appreciate you identifying an idea that you didn't think, maybe rises to a big idea. We didn't really want it to be an exercise of like eliminating, but I would be perfectly fine if any of you see things on here as you're scanning it that says, no, that's not it. That's helpful to us too. I don't want to dwell on it, but I think it's good for us to know if you see those sorts of those things there.
Yeah, thanks, Greg. Greg is very kindly trying to state that I am, in fact, an introvert. So, when I was taking a look at these, because I did take a look at them and really kind of sort through them a bit, wearing my admin committee hat. And I think for me, if I stay a little bit more focused on the economic portion of this, I think that for me, a diverse industry and employment portfolio is part of that evolved economic model or strategy, right, for the future, as is sort of having an economic toolkit supporting investment and revitalization. The revitalization piece for me is one of those pieces that does span across land use as well, and I think that's sort of indicated here. But I think part of that evolved economic model or strategy is really thinking outside of the box in terms of the economic development tools that we use. And Greg hit the nail on the head when we think about land acquisition. That is one of those more out of the box thinking methodologies, because we don't do things like straight up tax abatements. And we don't use that tool for good reasons. But that means we also have to work a little harder at being a little bit more creative in the tools that we provide to ourselves and that we provide to future councils. Because Greg is exactly right. Our tax base may change drastically in the not too distant future, and we've got to figure out how to be ready for that. And having that diversity of industry and employment, and I would say workforce development goes with this from my perspective, and that also kind of fits in with some of these other areas. But because it's difficult to get industry and businesses to want to come if they don't have that workforce ready for them, the educated workforce that's ready for them. But that butts up with some of our housing stock situation too. So there's some other things that I think do come into play, but that's it in a nutshell for me. Is to me it is an evolved economic, I might say, strategy. The model is part of that strategy for the city's future. Understanding all the threats that are out there and the changes that are coming, toolkits, and having diverse portfolios and stuff, I think is as a part of that. That to me is the biggest idea on here.
Right. Well, and you tied a number of things to that, right? It's not just an economic strategy, it's a housing strategy, it's a talent strategy, it's those things. And so this becomes begin to feel like, like wrapping a few of these things up in together into something, more significant than they would be on their own.
Yeah.
Andy, did you have?
Yeah. Yeah, I guess that my first thought is, and this is maybe directed more to Greg because we really have his brain for roughly 6 more months. And I respect his opinions and the way he views things. So obviously you folks are probably memorializing the comments he's already made on the limited scope that he made them on tonight, but I'd really like to see, and I don't necessarily want to see Greg's comments on everything, but I took this list and I went through every item on the list, not just the economic one. And if we're already doing it, it's sort of ingrained in how we do business. It's already part of our philosophy. I kind of noted that, already doing it. So we can focus on the things that are truly the big ideas that we need to focus more on. And then I kind of asterisk the ones that I thought were like, we need to go after this stuff, the big ones. And I think the same is the same would hold true for Christina. We're on this committee, we're focused on economics, but we're all council members and we all have a voice on all of these issues. And we don't want something to slip through because we didn't make a comment on it.
Right.
So I use this particular page, and then there's background that's a lot more meaty than this. So as an example, say, I can't really read all this, LU.1, land use.1, there might have been 4 different bullet points under that LU.1 that sort of reinforce what that means or what it, there it is. So I use this document to write a lot of comments. And again, it was basically like, we shouldn't waste our time on this because we're already doing it, or that's a pipe dream, or we need to address this ASAP. So that I'm not telling you what's right or wrong, but again, Greg, we've got the benefit of having his influence and brain power for 6 more months. Why not leverage it the best we can and hear his viewpoints on all of these things?
Right. And so, Greg, it wasn't necessarily homework. Andy was with us and he had to leave the meeting a little early. Somehow he ended up staying with us a lot longer than I thought he was going to be able to be, wherever he was walking or driving. But in lieu of not being able to stay in the conversation, throughout the evening, he did offer to do that, and it's very helpful. So if anybody feels like doing that, whatever the reason, we're all for it.
I completely agree with Andy in a number of respects. And like, for example, when we talk about city services have been exceptional in the city of Dublin for many, 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 many years. And that's one of the reasons it's so successful. So in my mind, I could have put that in the, if it ain't broke, don't fix it category. That's going to continue really, even if we stop, if we stop the process of this conversation, which I don't think we should do. I think it's a really important conversation. But if we just stopped having these conversations, what things on that list would continue to happen anyway? And I guess I would just say, well, we're already doing those, so we don't need to highlight. It's the things for me, Jamie, are like, when you think about what put Dublin where it is, and you think about, for example, I guess it's timely to make the comment, Jack Nicklaus building a golf course here, and 270 being punched through, and Wendy's and Cardinal Health locating on 270. I mean, those were like the big things that happened that were like the anchor stores in the mall that you wouldn't have had the rest of it if you didn't have those things. That, in my mind, that's what that document is more intended to be. Like if we need it, like Andy said, if we really want to go after it, if we need another Muirfield, we better go start looking for that now. If that's the kind of thing, that you need, it's those big ideas that aren't going to happen if you don't talk about them now.
Yeah, Greg, I think that is an excellent way of framing it. Another way related to that is that even if you're not already doing it, if it's something that you might typically address, like in a community plan or some other policy document or approach, then that's probably not a big idea either, you know? So if we're already doing it, if it's scaled to go into something else, that's not what we're talking about. And that's why I think, you know, we're trying to like take this list of 39. And if you got something new tonight, we take it too. But out of this list of 39, what really ought to like rise up? And I think, you know, Andy pointed out, and you just reinforced, Greg, like, if we're doing it, let's not put it in there. Let's just not do that. So I'd be curious about any of the staff members who see, and again, it's economics or it's other things, but anything that you might see that you believe should be, could be, you know, elevated out of this list. Anybody? Michael, you have anything that you see there that just really gets your attention?
So yeah, I mean, overall, because I've been involved in a couple of these different committee meetings across
Right.
a few weeks and different areas. I mean, one thing that I think that's been it's aided in Dublin's success over the years is its adoption of technology early on, and you know, its use of fiber and being able to span it across the city and really provide excellent level of services. And you know, technology in mind and infrastructure, or even coming down to just power and you know, renewable energies. I think those are some of the key things that we would really want to keep a look at, and that would be able to be bundled into some of these economic pieces here, and to be able to go ahead and provide a better level of service overall for the future, so that it's sustainable. We'll be able to handle, you know, whatever fuel source, whether, you know, things are trending towards electricity right now, but you know, in a few years maybe it might be hydrogen, or you know, we don't know specifically what it is, but being mindful that we would be able to prepare ourselves for that technology or that source to be able to and jump on it to be able to provide it to our citizens, to our staff, and to all our businesses. And I think that will help, you know, bring diversity, and will also help also support our economic model for the future as well.
Great, thank you very much. Rosa, do you have anything you wanted to share about elevating something, or?
I'm sorry, I'll have to admit that I did not look at the list ahead of time, so I'm not very familiar at the moment with what's on there.
Right, all right. No worries. You can always take the Andy route and just, you know, mark it up and send to us. Anybody else? Matt?
Yeah, I think I wanted to echo, I think, what is obvious to members of this committee, but the most important thing is the economic model. If you can't do anything without money, and that seems a blatantly obvious statement, but I'm amazed at how oftentimes people seem to forget that, or think that the money is the given part of the equation. And it's just not. It was never easy, and I have a feeling it's already ridiculously hard, but it's only going to get harder to sustain that. And I think what we need to keep in mind as we move forward to a degree, as we're starting to talk about this, is that city councils and residents get to determine what their community looks like, right? That's their job. But the marketplace determines what it rewards economically. And to the extent that those two visions are different, you have a loss in fiscal strength that you could have otherwise achieved. Dublin has always almost perfectly mirrored what the market wants and what the community is going to look like. And we have a ridiculous amount of fiscal strength because of that. Now, we have a lot of turmoil right now. We're in probably the most transitional time in workforce since we stopped hunter gathering. I don't know, but it's going to be kind of crazy to go from a single percentage of remote workers to whatever we're going to be.
Hey, Matt, John Reiner was on council when we were doing the hunter gathering finance model.
There you go. So he might have some experience with these paradigm shifts. But there's a lot of turmoil, but we're going to move to something, and that model is going to have a value associated with it. And it's going to be a significant change from whatever the old model was. And
Mhm.
I think, frankly, we're struggling with even some of what the in-between model was. You know, the model changed in 2010 to a mixed-use, commercial, residential kind of development, and we have Bridge Street. Okay, that was 2015. That model is what it is. How do we continue kind of that interim phase? And whatever the next phase is going to be potentially radically different from even this kind of interim shift from 2010. And if we don't embrace that, which is fine, it's absolutely our right as a community to council members' right to determine what that looks like, but it costs you money in lost revenue. And then you have to take other things that you might have wanted to do off the table because you're valuing things that the marketplace isn't going to value. So I just have a real thought process that we have to keep in mind, that we have to kind of work through those differences between visions that are going to emerge potentially. And the marketplace is going to do what it wants regardless of what we want. And you can make different decisions, but you have to make different fiscal assumptions based on those decisions. And that doesn't even take into account the fund that is kind of, you know, the current income tax situation at the State House and all that. So that's just kind of my thoughts.
Yeah. So Matt, you on the economic model, and Greg, I would invite you to jump back in here too. But you know, we're going to have to write some narrative or try something around this economic model. Not what the solution is, but what are the ingredients? And so I've just heard you introduce the notion about the market. You know, market attractiveness. There clearly, as Greg was talking earlier, I think sort of the general fiscal structure about, you know, the laws about, you know, where the money comes from piece. So there's a fiscal part to it. What are the other aspects of the model? I mean, again, I'm not holding you to any of this right now, but like, what might this be?
You know what, Jamie? There was a thing that I remember when DeWine and Husted were running for governor and lieutenant governor, and Husted came here, and I sat down and had coffee with him at Le Chatelaine, and he said, "What do you think is one of the biggest threats to Dublin?" I said, "Why? Two that I think. One, our western border, and it turning into Sawmill Road. We got Sawmill Road on one border. Having a Sawmill Road on our other border would be disastrous. And then centralized collection, for me at the time, was the biggest financial risk, because to me, it wasn't a very far fall to go from centralized collection with, you know, net profits and all that, and extend that idea, and then get to, once you give a bunch of money to the state and you let them have control over it, well, now you're going to get to centralized distribution, and they're going to start saying, well, this community's got more and that community needs more. And so once you break the seal on that idea, I think it's a very, very difficult genie to put back in the bottle. And Husted said to me, I don't even really know what that issue is. I don't know why you would think it would be such a big deal. And my only comment to him was, I've never heard of any government program ever anywhere in the history of our country that has ever gotten smaller. They always just get bigger, and they expand their reach, and they expand their sphere of influence. And so centralized collection may not look that terribly threatening now, but once it evolves and starts to getting into redistribution, then you're going to have a problem with the Dublin, because I don't care what the equation is, this community will come out on the losing end of that redistribution. And so you had that that policy, philosophy, whatever, sort of rattling around in the state budget, and then COVID happened, and then now you got all the, you know, working from home and where you work and where you tax and 20-day rules and all that stuff. I think all of those things combined to put us in a very, very challenging, risky road to go down in the next 5 years.
Yeah. So is there, Matt, Greg, anybody right now before this conversation, you know, with the 2035 around, you know, like a fundamentally different economic model? I mean, is this being addressed at all in the city right now? I know that somebody's probably at the State House regularly, like talking to people, but is there anybody actually thinking about, you know, how we get ahead of this potential impact? Is that an active thing? Because again, I don't, if this is one of those things that we're already doing that, then maybe it shouldn't be part of 2035.
But Jamie, I think the point is that there are certain aspects of that, yes, we are addressing. For example, absolutely, we're working with other municipalities across the state on this tax issue, right? We've very actively worked on central collection issue, right? Like as soon as the government says, "Hey, I'm from the government, I'm here to help," that's when you need to get somebody going. And we have from the beginning, but not in the context of an overall larger evolved strategy. And I think that's what we're trying to get at here, is that those pieces are all fine and well to do. You have to do them. You have to have people who are actively pursuing the right solutions.
Yeah.
But how do all the different pieces fit together in that bigger strategy piece? And I think that to me is where the really big idea is, because it's taking these different concepts that we're talking about and bringing them together to reach what it should be a shared vision in terms of our diversity of the numbers, sizes, types of businesses that we have. How do we handle our housing market to support bringing in that workforce that these companies are going to want to be able to leverage? Like, we're talking about some of these things, but not altogether under that umbrella of that shared vision and the strategy to get to that shared vision. That to me is the big idea.
Yeah. Well, thank you, Christina. That's very helpful to me, how you described that.
Yeah,
another interesting dynamic about this, Jamie, and what is going to evolve when we get back around to talking about it, is from in the centralized collections conversation. And I was way more involved with these conversations when I was in the mayor's seat, because you meet with other communities, and a lot of the community, there are a handful of community, we know who they are: New Albany, Worthington, probably Grove City to a certain extent, who would be on the same side of the table at that conversation, where we would be at risk to be the haves. But there are going to be some communities that are on the other side of the table that are the have-nots. And so when we had two different mayors organizations, I'm assuming Chris is still having to go to these things, but COMA and then the central, there's two different mayors groups, and they try to bring there's a central Ohio mayors group, and then there's a state group of the biggest, I think it's 30, the biggest communities. The conversations where we have spoken up and had a voice has been in the conversations within those groups. And within those groups, there's going to be separation as to what's in their best interest, because there are going to be potentially communities around central Ohio. I mean, we should have to be honest about this. I mean, we can't beat around the bush and be afraid to talk about it, but there will be communities around Ohio that would do better off with centralized distribution, and then there's others that are going to do worse. And my thought always was, just leave us alone. We should be allowed to opt out of this thing. We don't want any money. I think it cost, and Matt would know better than I, it costs them more to process our net profits tax returns than it does for us to process our own net tax returns. So what favor are they doing us? It's exactly zero. But there are going to be some communities who, if this mission creep happens, and I could be totally wrong, but if the mission creep happens, the only places where we're having conversations are with other communities. We need to maybe start to identify the communities that we have aligned priorities with, because this is a pie that's getting divided up, and there's not more pie just because you wish there were.
Right.
So this could possibly be the nature of the conversation, and where it happens could be evolving.
Yeah. No, that's good. Kevin, did you have any thoughts on this, or in general about elevating anything that you see on the list?
No, I absolutely agree that the economic development needs to be elevated, or monitoring the future of work, because of our economic development, that's why we are doing so well revenue-wise. And because of the pandemic now, that whole model is now very fragile. Where's this going? Now you actually have the fact that you have a lot of businesses are probably not going to bring back all their employees. They're going to bring back either a hybrid model or none at all. And we actually just had a company of about 600 employees that's not coming back at all. That's a huge hit. So we need to pay attention and elevate this part as far as monitoring where the future is going to be going.
Yeah. No, thanks, Kevin. I was, before this call, moderating a future of work conversation with the leading IT people from Chase and AEP and State Auto and Kenny McDonald and Dr. Harrison at Columbus State, and there was an interesting dynamic there where they were saying in terms of getting their talent needs met, you know, for here that the pandemic had actually opened up a lot of opportunities because they could hire people no matter where they were in the country to work for them because they didn't have to be anywhere. And you know, Kenny responded very quickly and said, well, the opposite is also true, that we're able to hire people here that they're, instead of working in Boston, they're actually working here now. There's a whole recruitment piece. So it's happening on both sides of what that future of work might look like in this more remote. But they also all of them to a person, to a company, were really quite aggressive in their feelings that the current generation, you know, that's coming into the workforce right now, they're not going to get them in large, you know, they're going to just demand many of them to work, you know, remotely. That's just part of it for some of them. And so those dynamics are really, really important. And I think should be part of the conversation here. And we're talking about the ingredients of this new economic development model. You know, the market's one part of it, but, you know, how work gets done is I think another dimension as well.
Because our concern, for example, is about 81% of our revenues come from employer withholding. And of that, a large chunk of that, probably 85 to 87%, comes from non-residents who are coming into the city and working every day and then leaving.
Yeah.
Now, based on the current model, that if you have a lot of people start working from home, which is a good potential in the hybrid model or working strictly from home, we would have a drastic reduction in tax revenues we collect. So that's a huge concern.
Yeah. Yeah. It seems like part of the challenge for you is just trying to get your arms around what the heck is actually happening. You know, like I'm guessing it's not easy from a data standpoint, unless people are self-reporting in a certain way or their companies are reporting in a certain way. So the model, I think, also has to have a monitoring component to them that's, I think, fairly sophisticated.
Yeah. Right now, we actually have our development department is doing a very good job, I think, trying to contact our largest employers.
Yeah.
To try to find out, hey, are you going to bring everybody back? Is it going to be a hybrid, or are people going to strictly work from home?
Yeah.
And they're getting kind of they're not getting the responses as fast as we want to know because they don't know. They don't know if they're going to bring it back this summer or fall or next year.
Right.
So that's a model that the employers don't even know.
Yeah, a lot of uncertainty. Someone was trying to, I think, jump in here today.
Yeah, Jamie, I wanted to go back to the components because I think that's important. That is, I don't know all of the components, but I think we can start to identify a few of them that might matter. To Kevin's point, you know, if only 15% of our withholdings are from residents and we're in a remote work environment, then it seems that it should be important to increase that percentage as an economic model. How do we get more people to live and work in Dublin? Previously, that wasn't a concern. We wanted you to work in Dublin.
Right.
That goes to housing strategy, right? Housing strategy has been regional, but now housing strategy might need to be local. And how does that change the types of homes that you want to offer? Because regional housing doesn't work in a remote work environment the way that it does in an on-site work environment. So that's a concern we need to look at. And I think the other component of that is a diversification of industry, of company, right? Dublin is a headquarters town. That's what we've always gone after, is the headquarters. Well, that's accounting, HR, IT. All of those are highly susceptible to remote work. So the economic model of the future might not be headquarters towns. It might be a tax flex town, a high scientist town, specialized manufacturing. Can you believe such a thing could be exactly what Dublin would look for in the future? Something you have to go on site, be highly skilled at.
Right.
That is the kind of economic model type thinking that I'm thinking of when I think of this is, okay, what were we? It worked. We don't know everything, but we know some things. What do you need to come on site and do? How do we get more people to live and work here? Those are at least two things. So diversification of industries, housing policy, specifically as it relates to resident workers. And there are probably other variables too that need to be explored that are changing drastically. We don't know where they're going to end up, but we know the direction they're going.
Yeah. No, that's great, Matt. I think you just worked your way onto the committee for this new economic model. but it's good. And I really like, I mean, so many of you have raised issues that aren't at the core of the issue, but they are fundamental. And I like that you raised housing, even housing type, right? If you and your significant other, there's two adults who are going to be working from home, you might need a little bit different product than conventionally is available in the market. You know, in some places there are things called live work units, like they're just accommodate that kind of flexibility, but you don't want to work on your dining room table in perpetuity. So what does that configuration look like? So it is attractive, you know, to be at home. Although if you don't want them working at home, then you wouldn't do that. But
a daycare center becomes a much more critical economic development piece in a neighborhood than it is in an on-site work where you locate your daycare centers in your urban core. Maybe you locate your daycare centers in your residential neighborhood so that the kids can walk. I mean, it changes the location of where things become an amenity because where you're working has changed. If you could work in an apartment building versus, I think all those kinds of things start to change.
right. No, I think that's great. And, you know, like some of your fellow committee members or other committees, you know, 3 of the groups had these, you know, for lack of maybe better terminology right now, like mini cities, like these mixed use clusters. I mean, it seems to me what you just said about daycare, about different housing types, like you could conceive the mini cities with this idea about the future of economic development and how these places might be different based on, you know, what you're trying to address and achieve.
I would say too that as we talk about the different components of economic development, there's also going to be a shift in office space, right? So if you're shifting, if we want to shift from a headquarters town to a TexFlex or R&D or whatever, that's going to be a different office space need, right? If we're going to see companies starting to move to a permanent hybrid situation, their space needs change as well. And so that goes into some of that redevelopment piece we were talking about earlier in terms of as we look to redevelop some of the areas that are ready for redevelopment or developing out some areas that have yet to be developed, that those should be designed and done with that greater lens of that strategy to figure out, you know, how do we get into the future versus staying where we were. So there's, I think there's that housing component for sure. I think we've all brought that up, but there's then also that office component and how is that going to change as some of these other things change. And we don't know the answer to that yet either.
Right. Yeah, that is the part of the tricky business that you're in here. Is that you know, there are communities that are I don't mean struggling in a negative or bad way, but just like trying to put your arms around this stuff. And in order to move forward, you know, you're going to have to make some bets, and you're not going to have probably what you would like to have in order to make some of those decisions. So it's going to be really tricky here in the next now, right this moment, but over the next few years, I think it's going to be really tricky to make your bets. Yeah. So Homer, did you have anything like elevating or reaction wise?
No, not really. I mean, great conversation so far. I mean, if I tell everybody my input, I'm going to sound like a broken record. But I still think that we got to pay attention to the infrastructure of the city, given, you know, the future of vehicles and transportation within the, you know, in the future within, you know, our nation. A lot of our automobile makers are, you know, got goals of going to electric vehicles by 2030 or 2035, and you know, those kind of infrastructure things are things that we're definitely going to have to look at in the next 10 years in the city of Dublin and Greater Columbus as a whole. You know, so that's something I think is probably my number one thing, looking to the future of transportation around the area.
Right. Well, that's good, and it's all related. I was going to say connected, but that seems silly. Tammy, anything you wanted to share? Or?
No, I was just thinking about, I guess this kind of falls off of Christina's comments about how things are going to look if people are not returning to their workplaces. So from a land use perspective, what happens to those buildings and what happens to all of that parking, you know, the sea of parking that we theoretically need to park those big complexes, how are we going to be prepared? Because we're probably going to be feeling the impacts of COVID for decades to come. And so, and again, like you said, we're not going to have all of the pieces of information that that would make us feel comfortable making decisions. So we're going to have to use a lot of guesswork. So there's some big decisions to be made from that respect.
Yeah. Megan, any, some of you have been in multiple meetings, so you may feel like I already gave.
That's kind of how I feel.
Yeah.
But I will say, or I'll offer, I was in a meeting this morning with the Chamber of Commerce, and they went around the room and provided insight into what their company's thinking in terms of returning to work. And I took very copious notes on what each business had to share. But I mean, for the most part, just to summarize, it did sound like for the most part, they are planning on have either already returned to work for the majority of their workforce, or they are planning to work. Some of the discussion was around, just seeing increased productivity when they do have their teams in the office, and increased collaboration, communications improved. So that was kind of some of the themes that I heard. And then, once we shifted from that conversation, which was, a lot of the meeting discussion, then the conversation went to workforce development. And that was essentially the other half of the meeting, and talking about workforce development, transportation. So that gets into the housing discussion, which Matt was raising. And Tammy, I'm sure you'd love to hear the housing discussion, because Tammy, it is timely. Tammy's working on drafting a scope for a Dublin housing study. So that regional study had been completed, and now we're going to take what was gleaned from that regional study and embark upon our own Dublin housing strategy study, which is good. So all of this conversation can be used to inform that draft RFP.
Super. Thanks, Megan. So, Christina, I don't know when you want to, to end the meeting, if there's anything else on your agenda or thing you wanted to address, but it's really clear for me from this conversation, and rightfully so, given the focus of this committee, about where we spent our time. And there's a really, really rich, big idea that I think is emerging out of this, that will fuel, if done, if successful, or impede some, the other work potentially. So that's been really helpful on here. But I didn't want to end if there's anything else, like put the model away for a minute. If there's anything on the list, it could be any topic around, mobility, or is there anything on here that you say, yeah, this is not finance, it's not economics, but it would be fundamental to, a sustainable, successful place? Is there anything?
There's one thing on here that I don't like.
You don't like?
Yeah, it's I'm sorry, I have to find it. It was about ID cards. I think it was under infrastructure. Right, yeah, in IN5.
An ID card.
This one is like, for me, this is not a big idea. I mean, it's a tactic. I don't know that creating a resident ID card. I think that it's really more about connecting information to city services. However you might do that. Like we already kind of do this through the Dublin Go app, and you can either put some personal information in there or not. And maybe it's something that expands on something we're already doing, but that one just felt real big brothery to me. And I don't think it's necessary, because we have other ways of doing that, and other tools we can leverage to help us do those things. We also have other partner agencies, like, for example, if you think about our aging population, we don't want to recreate the wheel, and we don't want to duplicate services that are already available. It's more about connecting them. And I think the big idea here is to have better ways of connecting folks to the things that they need. So the ID card piece of it, I just don't, that part makes me feel uncomfortable.
Okay, no, I appreciate the candor. And I would take that on any of these, because we just need insight in order to manage a big list at some point. So I appreciate that. If you could eliminate another 35, we'd really be good. I'm just kidding.
Yeah, I mean, I'm happy. I have notes. I just I didn't send them to anybody because I didn't really know who I was supposed to send them to.
Yeah,
But I mean, I have some notes. I'm happy to. Who do you want me to send them to?
probably to Tammy, and is that
Tammy.
Is that the best thing? Okay, yeah,
Yes, please.
Yeah, I'll get those over to you.
Yeah.
Just like comments like that.
Yeah. We would take any of those, Christina, and from any of you here who, want to dig into those. Between now and the 21st would be great.
Yeah, I can get them over there in the next day or so. I'll go in and clean up some of my notes. They're not very neat, but so I won't belabor them because I'll just clean up my notes so they're a little bit clearer.
Okay.
It's a little bit stream of consciousness, so I just need to go through and do some editing.
Okay. Well, thank you. Anybody else have anything they want to call out for elevating or not elevating? Okay, so you have your opportunity to send something into us. So we ask all the other groups, so hopefully this won't be too painful. But we were just trying to get a sense of, we want to have the, the end in mind when we start this work. But, if the economic model was done and done well, or even some of these other ideas, like, just give me a word or two, but one would be fine. Like, what kind of place would Dublin be in 2035 if we carried out, what we've been talking about tonight? What kind of place would Dublin be? And you should already have an answer.
Fiscally stable based upon the
Fiscally stable.
conversation.
Yes, fiscally stable.
I think, Jamie, for me, it would remain cutting edge. We've been cutting edge for generations, and we need to work really hard to remain cutting edge.
Cutting edge. Great. You guys are good with the compound words. Give me another compound word here.
Well, I would say my words are just going to have multiple meanings to them. They're not going to be compound words, though. I would say diverse, and I mean diverse in many different ways, right?
Okay.
Including the things that we've talked about here in this meeting that are very financially focused, right? But as well as in, human capital and housing and some of the other ways that we've talked about as well. So diverse would be one, and then thriving in some of the very similar ways that I would describe as the different meanings of diverse as well.
Okay. No, that's clear. Thank you.
I would sort of echo some of the other comments. Fiscally robust, something like that.
Yeah. Yeah. No, that's good. I mean, most communities would take fiscally stable, but my sense is that you guys for years have been more on the robust, so you want to stay in that lane. Anyone else have a word? Anybody? Everybody?
I think agile.
Agile. That's really important. Yeah. Thank you, Michael.
I'd go with desirable.
Desirable.
Enjoyable.
Enjoyable.
I just thought of community of choice. If you're doing everything
Choice.
well.
Oh, good, Rosa. I like that. It's good. Anybody else? Going once. Okay, super. Well, thank you all very much for the time this Monday evening. We are now, with this being closed, we're going to reshape this document that you have, the 11 by 17. We'll begin to reshape that, and then we expect to get quite a bit more input from the community coming up end of June into July, and we'll see you. Logan and I will see you on the 21st. So I don't know if it goes back to Tammy or Christina, but thank you all very much this evening.
Jamie, really appreciate your time and appreciate your help. Certainly very worthwhile conversations to have, no doubt about it. Matt, I don't think we have anything else on our agenda, right? All
We
right.
do not.
Anybody else have anything else they need to bring to the front for the good of the order? No, then we will stand adjourned. I appreciate everyone's time. Thank you so much. Have a good night.
Good night, everybody.
Night.